Hello everyone and welcome back. In this video I want to talk about Google Alphabet because the stock is only going up and this is my largest position at the moment. So I want to make a quick update about what I'm going to do with my Google position, and I want to discuss some specific points with you guys. So as you can see from this stock chart, the stock is going on a parabolic move. Some people are euphoric, some people are scared, and I have been a Google shareholder since 2018. So it's with the great joy that I see the mood fluctuations over and over again. I've seen the exact same phenomenon happening in 2021 when nobody wanted to touch Google in 2020. It was the boring play, and then the stock exploded to the upside in 2021. Well, same thing in a few months ago, 6 months ago, nobody wanted to touch Google. It was a boring play that was losing in the AI race. And now everybody is cheering up, everybody is celebrating Google. You have plenty of positive catalysts to the stock. And it was a big position for me, right? It was like a 10% allocation, 11% allocation in my portfolio. And because the stock has gone up so much, look at this. This is my portfolio. My portfolio is public, by the way, on eToro. It has become the largest position in my portfolio with 16% allocation, right? Better than Brookfield, better than AutoZone. Now it's clearly by far the biggest position I have in my portfolio, okay? And by the way, my portfolio is public. I'm a public investor on eToro. More than 4,000 people follow me. You can copy trade me, my portfolio, if you want me to trade like you. And if you want to follow my positions, you have a link in my description to just follow my account. Publicly every day you can check what my account is doing, if I'm buying some stuff, selling some stuff. Okay, so I want to talk about Google, specific things, the fundamentals, what the thesis is doing right now, and if I'm trimming the position because now the stock has run up significantly. We are due for a pullback one day or another. Okay, I think we can start. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. Also thanks to Google, by the way. I'm making 25% per year because I've been investing in Google for 7, 8 years now. Same thing for Meta platforms. I know these companies quite well, and I know that the sentiment, even for big caps, can change a lot. And I want to start with this tweet from George. Great tweet. Google was a $1.5 trillion company, then proceeds to double over the past 7 months. Remember that for the next time someone tries to tell you there is no alpha in mega caps. Absolutely true. And I remember when I was in business school, people taught the theory that markets were efficient, that markets knew everything. And the only way you could get some alpha, some outperformance in the market, was by looking at small, hidden value plays in the market with a big, I would say, a value discrepancy. Well, Google was only here and standing here in plain sight, not hidden at all. And a couple of months ago, in April, in May of this year, the stock was trading at $150. And the worries at the time were that the LLM from Google was not great, ChatGPT was great. You could not monetize all these blue links, and now the sentiment have shifted. Maybe you are not a tech guy, but you know that the sentiment is weak. People have a weak conviction, and as always in the stock market, people change their mind a lot. If you want to have some laugh, if you are doing nothing this afternoon, you can just check what the sell side analysts were saying on CNBC a couple of months ago. You will have a very good laugh, I think, to just see what they had to say a few months ago. These experts guys, what they had to say a couple of months ago. People were bearish on Google only 6 months ago. And now the same guys are going to CNBC and they are now bullish Google. well, a little bit too late if you want my opinion. So yeah, as always, smart money is not so smart. And we, as retail investors, have an advantage because we are not forced to buy what is hot in the market. We are not forced to go on CNBC and do our quick stock pitch. We are not forced to follow the crowd. We can have an independent opinion, invest forcefully a lot, and make a big position. And it's exactly what I did with Google. It was a massive position when the stock was down immensely in April and May. And now it's become the biggest position in my portfolio by far. And I'm outperforming the market by what, 5 or 6% as of today, which is good. Pretty happy with the performance. We are up 20% this year. So wonderful. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Okay, second point I want to mention, that's the re-rating of this business. When you look at the PE ratio, in 7 months ago, the PE ratio, forward PE ratio was 16 for this high quality compounder, and now it's 28 because a lot of things have happened. Okay, here is a great Twitter post from Amit. Google in the past few months, you have a couple of positive news that impacted the stock price, and this is also the reason why the stock is up so much. First of all, Berkshire Hathaway, the company of Warren Buffett, took a starting position in the stock. Positive momentum. Secondly, you have an antitrust case that dropped. A few months ago, in April, people were really worried that Google might be broken out. Okay? And finally, after a few months, Google was dismissed. No problem whatsoever. You don't have to sell your Chrome business to the world. So that's another layer of uncertainty that moved away. Third thing, Gemini 3 beats every model so far. It's the gold rush now. Everybody wants to have the new best model, the new ChatGPT, the new Claude, the new Gemini, and it goes by cycles. Sometimes XAI has the best LLM. You wait 2 months, ChatGPT has the best model. You wait 2 months, Google has the best model. You wait 2 months, and this is a cycle like this. So far, Gemini is winning, and so far, Gemini is shocking the world right now. Wait and see. You wait 1 month, and you will see. You will see if you have a clear leadership here. I don't know at all if Gemini will continue to be the best model so far. Don't think that ChatGPT is sleeping. I don't think they are sleeping at all. But you see many people shifting from ChatGPT to Gemini now. You have Mark Benioff. Even big CEOs are mentioning Gemini in a good way. Something that also affects the momentum. Okay? Same thing, you have some contracts, small contracts with NATO. At the same time, you have now a partnership between Google and Meta Platforms. So many more contracts, many more deals to boost the growth in the future. At the same time, the growth for Gemini is just improving and improving and improving. The search revenue is still strong. The cloud is now profitable and growing 30% per year. So yeah, a lot of things have happened. And now, as this beautiful tweet is sharing from Arya, by the way, I'm mentioning a couple of guys in this video. You can just subscribe to their YouTube channel, to their Twitter accounts. These are great accounts to follow. And Arya says, here are the different PE ratios of the big tech companies without investment gains. Okay, not a lot of people have mentioned this online. Arya is one of the few people that does this. So wonderful, you can just subscribe to his YouTube channel. Great content, great analysis, great fundamental investor. And I also made a video about this a couple of days ago when Google reported earnings. Basically, Google is cheating. Well, that could be the good title of a good YouTube video, right? Google is cheating with their earnings because Google Alphabet is investing in other private companies. And the value of these other private companies, the value is going up, which means you have an investing gain. And if you take into account these private companies, these private assets, the profits is immense. The value of their investments in Anthropic, for example, or SpaceX is immense. And that boosts the earnings. That boosts the earnings per share for Google. So not a lot of people mention this online, but if it wasn't for their investment gains coming from private companies, Google would have missed earnings estimates a couple of days ago. Very few people mention this. I think it was here. When was the earnings report for this company? I don't remember. But yeah, if you exclude the investment gains, if you only focus on the core operations from Google, they missed on Wall Street estimates. But now they are investing in private companies. The value of these private companies is going up. So yeah, Google is cheating. And maybe the earnings need to be adjusted. And this is what Arya is doing here. He has created a custom metric on Fiscal AI for Google, Amazon, Apple, and Microsoft. And he calls it the P ratio without the investment gains. So you just remove the unrealized gains. You remove the fluff for the valuation. You just focus on the core operations for the business model. Because I'm telling you, now the value of SpaceX, the value of Anthropic is going up. So it's an addition to the earnings. But maybe in a few quarters, the value of these private investments will go down. So it will be a drag on earnings. And I'm telling you, if you have a recession and the value of SpaceX goes down, for example, the adjusted earnings will go down, the investment gains will go down, and people on Twitter, people on YouTube will adjust. No, but you have to look at the core operations of the business model of Google. Please dismiss the investment gains. Yeah, people will make the adjustment only when it's bearish, okay? When it's down, when it's not good to be invested in SpaceX and Anthropic. But you also have to adjust when things are good. And this is what Arya is doing. Because this is very important now. If you adjust for this extraordinary gain from investment gains, here is your PE ratio for Google. And now the PE ratio is 39, 40. Do you think Google is cheap now? Do you think Google is reasonably priced? Do you think Google is expensive? Okay? And he compares this new ratio, the adjusted PE ratio, with other companies. Here is Amazon PE ratio without investment gains, 38, at the lowest valuation level we've seen in quarters now. I mean, it was in April last time, but you are decently low. Next company, Apple. Apple has a PE ratio without investment gains of 35, which is expensive given that Apple is not growing anymore. And the last one, Microsoft. Microsoft is dropping in terms of valuation. So the PE ratio without investment gains is 30 right now, which is reasonable actually. This is reasonable. Microsoft right now could be very interesting at given prices. Okay, so now Google is expensive. This is what I believe. If you adjust for the investment gains, which is a very good thing to do, Google is expensive. Now we are at the end of the year. We are in late November. So I think you will have Wall Street chasing after a few stocks. And as always, you have this catch-up effect. You have momentum stocks that will continue to have momentum until the end of the year. This is how Wall Street works. So I think Google will be on a nice run until the end of the year, as long as the positive news keep coming. And it seems like every day you have positive news for Google. So I will not sell any shares of Google as long as you have daily positive news. They can create news out of thin air right now. The positive momentum is just insane. After December, I will trim, I think. I will have to trim. So I will wait 1 month, or I will end for this positive news cycle to end, and then I will trim because the valuation has become expensive. And I will trim to buy other stuff, other stocks that have dropped in value. Fortinet is a good example, MasterCard is a good example, MSCI is a good example, Landbridge is a good example. Okay, but now having 16% of my portfolio into Google, given the high valuation, I'm maybe not comfortable holding this one. So I will hold for a couple of weeks. But when the positive news cycle ends, I will trim a little bit. I will not sell everything, right? I will trim from 16% of my portfolio to what, 10%? So only 6%. That's what, 1/3 of the position, not even half of the position. So I will trim, I will not sell. AI is in full momentum right now, so maybe it will be a mistake to sell Google right now. This is what I think. But yeah, the momentum is great right now. You can't really force it too high, but I think it's not stupid to trim Google a little bit right now. This is what I have to say, given the high valuation. Because maybe the growth can accelerate for next year. Now that you have more deals, now that you have clear traction, now that Google wants to try some ads in Gemini, maybe the earnings will reaccelerate. So I think it could be a mistake to sell out of Google completely. What if the earnings reaccelerate immensely? Well, the high valuation will not appear that high, right? So this is why I say I will trim, but I will not sell out of the position. And I will not trim now. I will trim in a few weeks. I don't know exactly when, but yeah, if I find some good opportunities, some good arbitrage plays between the value of a MasterCard, for example, I will do some arbitrage. But not now, because now I just take advantage of the momentum. We are at the end of the year. You have an effect from Wall Street that you can't ignore. And yeah, looking forward to seeing how December is. But I'm very happy right now because I'm on track to reach my 25% goal, my 25% performance target. So I can continue to have this nice compound annual growth rate of 25% per year. And it's almost a decade of investing. So 25% per year for 10 years is quite good. So I plan to continue, and I'm very happy with Google position so far. Yeah, as a recap, I am not selling now. I will trim a little bit, but in a few weeks. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.